Hello everybody, thanks to Jackson CPA here with another important update for you regarding the July 15 tax deadline that's right around the corner. So for all individual taxpayers and corporate taxpayers that have a year end of 12/31, you got some extensions. Also corporate taxpayers that had some year ends that resulted in your tax return being due between April and July. You also got a little bit of an extension for those as well. So basically a lot of corporation returns and individual personal 1040 tax returns are going to be due coming up here on July 15th. So wanted to go over some cool strategies that you can do and also just talk about some reminders of some things that you can do as well between now and then, and also some other things that are relevant to the individual taxpayer and some relevant to the business taxpayer. So that's what this video is going to be about. Let's hop right in. So the Treasury Department has basically come out and said that they will not be extending the July 15th deadline. So the Treasury Department runs the IRS, so essentially they basically came out and said, nope, we're not going to extend the tax deadline. So don't make that a plan of yours. If you haven't started on it, I would definitely get working on it. You also can do extensions though. So don't necessarily think that you need to go out and necessarily file your return. You can still do an extension. The one thing that I will say is you should consider making sure that you make an estimated payment by July 15th. So whatever that amount might be, try to make that payment by July 15th, but you don't necessarily have to file your return by July 15th if you're not quite ready. Especially if you have a business and you haven't filed that business return yet, you basically can't file your return by July 15th. So, so those are some things to think about. You can still file an extension, like I said. If you have S corporations or partnerships and you did not file an extension by March 15th, then you essentially are too late to file an extension. So you're incurring basically $200 per month that return goes unfiled, and that's per partner or per shareholder. So definitely want to make sure that you go through and get that done as soon as possible if you did not file an extension. Again, S corporation and partnership returns were due March 15th. If you still have not filed those, I highly recommend you get them filed as soon as possible to stop those penalties from continuing to accrue. That said, they might be somewhat lenient on the penalties, but you're going to have to basically get someone to help you try to get those abated. It's not going to be automatic, at least not at this point. So you can definitely expect those letters to still come out, okay? If you had any IRS collection issues that were on hold during this time period, they also have not extended that date. So it's looking like those collection efforts will continue and start back up come July 15th. So like installment payments, tax court cases, that sort of thing will likely start to kind of ramp back up. So expect to start to receive some of those letters, levies, liens, that sort of thing as well. Chances are that's going to all start back up. So keep an eye on that. Make sure your address is updated with the IRS. If you had to move because of the coronavirus, send in a form to update the address with the IRS, because if they send you letters and you don't respond, it's really bad, like really, really bad. So definitely don't recommend doing that. The Families First Coronavirus Response Act. This is just a little bit of a reminder. That's still eligible. So that's still applicable through December 31st. So that's still something that you can do for the Emergency Paid Sick Leave and the Emergency Family Medical Leave Act. If you haven't taken advantage of that yet and you do end up getting sick with COVID and you're working for a smaller business, you can still take advantage of that opportunity. So something that's still out there. And still available to be used. Again, that's through December 31st. So if something happens between now and then, you can use it. Also important to note that self-employed are also eligible for the paid sick leave. So keep that in mind as well. You can still get some a credit for that also for self-employed individuals. I'm not going to go into the details on those two I did a video earlier on those. They haven't really changed at all, so that video is still applicable. So I would definitely take a look at that if you still have any questions on that, or feel free to ask the question and we'll try to answer it as well. Leave a comment or something like that. Economic impact payments. So the economic impact payments are mostly out, I believe. They are still trying to find information and send payments to a lot of taxpayers. So if for some reason your information is not updated, definitely go online and update that. If for some reason you're a non-filer, so your income's too low to where you don't need to file a return, you don't get a refund, you don't claim the earned income tax credit, that kind of a thing, definitely make sure you do that. So you have basically until October 15th to get these advance payments and submit your information and get that in time. So I would definitely take advantage of that and make sure you get that taken care of. Otherwise, you may have to wait until you file your 2020 tax return before you see anything. So that's basically the date they're going to stop doing the advance payments. After that date, you should be able to still get the credit, but you would have to file a tax return in order to get it at a future date. So just something to keep in mind. So now let's talk about a couple of tax strategies that you can do, kind of last minute tax strategies with the July 15th date coming up here. So ultimately you can make some contributions to an IRA or health savings account, or an employer contribution to, if you have a small business, to like your 401k or a SEP IRA. So if you had a 401k in place as of the end of 2019, you still have until July 15th to make those contributions if you are a sole proprietorship or a C corporation. If you were a S corporation or a partnership, you have until September 15th technically to make it, as long as you had an extension. Okay, so if you filed an extension on time by March 15th, you have until September 15th to make those contributions. If you did not file an extension, you're basically out of luck at this point, because that's one of the rules, that you have to make the payment before the tax return is due or a timely filed extension. So those are basically the things that are available to you. If you didn't make that payment in time, then you're looking at potentially doing it for 2020 at that point. So keep that in mind in terms of the due dates for some of those payments. And don't forget about the Roth IRA. The Roth IRA is super awesome. All right, Roth IRAs are something that you can do that are phenomenal. Okay, it's one of the best ways to build wealth long term. You really do get to build wealth tax-free. So you pay, with the Roth IRA, obviously you pay taxes on the front end, and on the back end you don't pay any taxes when you take it out, especially once you reach age 59 and a half. All the earnings are basically tax-free. So Roth IRAs are very powerful. So don't forget about the Roth IRA. You can do up to $6,000 per spouse for 2019. You can also make up to $6,000 contribution for your kids if you paid them through your business during 2019, or if they had some kind of income that they earned from a job or something like that. You can still make a contribution for your kids as well. So, but be careful with the kids strategy. If you own a business, make sure you're doing it the right way. Depending on the type of entity you have to do it a particular way in order to save on payroll taxes. So definitely make sure that you're keeping that in mind and working with a professional like a CPA to help you through that process and figure that out. And by the way, I hear this all the time. Roth IRAs are available to anybody. Okay, and I mean anybody. Doesn't matter what your income is. Doesn't matter how much you contribute to your work retirement plan. Doesn't matter if your spouse works or your spouse doesn't work. It's available to basically everybody that has earned income. If you have earned income or your spouse has earned income, you can make a contribution to a Roth IRA. So the way you do it is through a back door if you make too much money. So if you make too much money or you have a contribution to a retirement plan at work, then you usually are ineligible to kind of go through the normal way to make a Roth IRA. But that just means you got to go and do a backdoor Roth IRA. So go back. There's a way to do it. You contribute to a traditional IRA, then you convert it from the traditional IRA as a you have to make a non-deductible contribution to a traditional IRA. Then you convert that traditional IRA to a Roth IRA. Now, there are some tax implications if you do already have funds in a traditional IRA or a SEP IRA, okay? So if you do already have funds in a taxable IRA account, there are some tax consequences of doing the backdoor Roth strategy, but at the end of the day, in the long run, it's probably going to be worth it to still do it. So keep in mind, do the Roth IRA as a potential, okay? And there's ways to get around the tax consequences and things like that, but you got to kind of work with a professional to make sure you understand all the rules there. And then once the money's in the Roth IRA, let's not forget about self-directing. You know, that's something that a lot of people don't necessarily think about. As you saw with the stock market this year, it plummeted, went down. So what could you have done that might have been a little less risky and might have saved you on that big plummet? Well, you could have did a self-directed IRA where you can basically invest in whatever you want, like cars, real estate. When I say cars, I mean rental cars, things like that. So stuff that you're going to do to make an investment and make a profit. So there's definitely a lot of cool things that you can do with your Roth IRA or with any retirement account for that matter, if you do a self-directed retirement account. So there's definitely certain types of retirement accounts that are eligible and certain types that are not technically eligible, especially if you work for an employer. Like an employer's 401k plan typically is not going to be eligible. But usually most other retirement accounts like a Roth IRA, traditional IRA, SEP IRA, solo 401k, all those types of things are technically self-directable. So something to kind of think about as you are looking to build your wealth. It's a great wealth building tool as well. You know, doing a Roth IRA or a self-directed IRA, a lot of great advantages to self-directing. So something to keep in mind. It's a little deep for this video, for this purpose, but if it's something that you're interested in and you want to learn some more about, I'll definitely be doing some more videos in the future. And if you just can't wait to have that video done in the future, then definitely reach out and we can chat about it as well. If you have a small business, just a reminder, make sure you take all your deductions. So some common deductions that I see that are missed on tax returns quite frequently are home office deduction, cell phone deduction, and the business miles deduction. So for use of your car. Those are some of the most common deductions that I see that are missed on tax returns. There's certain rules that apply to each of those that you have to kind of factor in and consider. But ultimately, it's a great way to save some additional money on your business return if you have a small business. And that's the sole proprietorships, S corps, partnerships, C corps, all businesses. So those are all things to kind of keep in mind. A lot of tax strategies at the end of the day need to be implemented throughout the tax year that you're trying to save money on. So it's important to talk to your CPA or accountant or whoever you kind of work with to do your tax returns and do some tax strategizing and tax planning ahead of time. But these are some things that you can do towards this, you know, after the year has ended, you know, figuring out your business activity, doing retirement account contributions, health savings accounts contributions, stuff like that. So, but in terms of some more deep tax strategies that will really save you tons of money, we really got to plan throughout the year. So something to keep in mind as we continue through 2020. If you're one of the fortunate few that has a business or, you know, hasn't lost a significant income or job or something like that, definitely a great opportunity to kind of start looking at your investment picture. A lot of us are saving a lot right now because there's not really much we can spend it on. Everything's kind of closed down. So this is that perfect time to start looking at your tax picture and understanding what's going on, especially if you haven't been that impacted by the coronavirus and you're still got a lot of income coming in. Definitely some time to think about all these types of strategies that you can do to save yourself some money on taxes and also build wealth and build your future. So that's basically it for today's video. Hopefully you guys enjoyed it and got some good information. Like I said, any comments, any suggestions, anything like that, feel free to leave them down in the comment section or shoot us an email or give us a call. So all that information is available online. Our website is iljcpa.com. Has a lot of valuable information on there as well. And we will talk to you guys later. Have a good one. And oh, by the way, happy 4th of July as well, since that's coming up here shortly.